Tether, which is the largest stablecoin by market cap, and basically the vehicle for moving in and out of crypto trades. There's a lot of Tether dumping on the market right now. $1.6 billion has been withdrawn from the Tether ecosystem. That means people are exchanging their Tether coins for actual US dollars in a bank account. If you're seeing this drawdown, you might be like, oh, that's bad. We don't want any graphs that go from left to right and go downward. Well, it's actually okay in this situation because it seems that it just follows volumes on exchanges, right? So there's a lot less people trading. Prices for coins are down. People are exiting the ecosystem. So people are going to swap out of Tether for normal dollars. Of course, there's a flip side argument here that probably a very small minority, but it is out there that Tether is winding down some operations, or at least like it's unsafe, insolvent. There's always those things are always speculated out there. They're always as a footnote. But I think the most important thing here when you're looking at a stablecoin chart is notice this is going to follow volumes, and this is going to follow sentiment and interest in crypto. Zach, I'm going to throw this over to you.
There is extreme fear in the marketplace right now, and this makes a ton of sense that some people are saying, hey, I better be prudent here. Better turn these digital dollars into actual dollars. And the fact that Tether is able to process these redemptions is likely a good sign. I think we saw in the wake of the UST collapse that USDC was sort of seen as a safer alternative. That's what a lot of sort of market commentators were noting at the time. And we did see some actual flows from USDT to USDC to mitigate some of those perceived risks. So the fact that this is holding up in this environment of extreme fear is probably a good thing, to be honest. And of course, I think we're going to see these redemptions follow on as more sophisticated traders look to get cold hard cash into their hands facing these global macroeconomic headwinds. So interesting to see these charts, interesting to see this happen. We're going to see if USDT and also USDC can stay resilient during this crazy, crazy time. But I'll throw it to Jen for hers.
Yeah, so there's a senior market analyst quoted in this article, and they said confidence in cryptos remains depressed, and some traders are worried that Tether could suffer a similar fate as Terra's UST stablecoin. And so I guess my question, I just have so many questions when it comes to stablecoins and mining, and then they always are directed at you, Will. Why are we comparing an algorithmic stablecoin to, okay, Zach, why are we comparing this algorithmic stablecoin to an asset-backed stablecoin? Is it just confusion? Like, why is this analyst making this comparison?
I would say, assuming positive intent there, I would say that it's about the dynamics of a bank run, right? So if like a massive, massive scale bank run were to occur on USDT, could Tether quickly and responsibly process those redemptions? That's still an open question. And I think that what the comparison there is probably likely to that human dynamic. I'll throw to Will for the technical dynamic because they are very different beasts, technically speaking. Will?
Yeah, they're definitely different. I think people bring them up for the reasons Zach's bringing up. Like, we have this same basket of goods, stable coins, and we always like to compare them against each other because they're used for the same purpose. But they are very, very different when it comes to the technical aspect, and you get onto like different levels of the risk spectrum as well, right? So for asset-backed stable coins like USDC, USDT, others, your risk is centralized to a company being solvent or insolvent. A lot of people trust Circle, the Trust Center, the consortium behind it, I think involves Circle and Coinbase. People have trusted Tether to date. There's always been questions about Tether, but for the most part, it seems that their attestations and their other clarity that they brought about their coin has been enough for traders to trust it and make it the largest stable coin. On the other side, like way over on the far right, you got Justin Sun and his USDD project, right? You got a guy who's known for popping these little coin casinos up, leaving the market when he wants to, and now he's doing the same thing with this algo-backed stable coin that's based on like a lot of weird, funny money, financial primitives that we have not seen work to date. So that's kind of the spectrum. But it is fair to compare them in a general sense, in a very broad stroke sense, because they are both doing the same thing. It is unfair on a technical level. And I think this piece kind of captured exactly what you want. You want to put them together and be like, hey, these things are like, they're both pies, but they're different types of pies. One's a mud pie, one's cherry pie. We can both have our pies. Zach, give it to you.
The skepticism is fair though, right? The market here hasn't been especially wise. There was a point at which UST was the third largest stablecoin in the market, asset backed or otherwise. So the fact that the market was voting with its feet behind this thing that failed miserably suggests that, hey, maybe caution is to be expected when we see this flood of redemptions from asset-backed stablecoins. It's going to be interesting to see how USDD enters this conversation. Again, I'm still betting on Justin. Still betting on Justin's son to ride this one out in true showman fashion, but we will see. It should be entertaining either way.